Hi everyone, welcome back to Be Rich. I guess I must be stirring the pot or I'm attracting more attention than I usually do. I'm seeing a lot of comments being brought by my team to me that a lot of people are talking negatively about NATCO and what we said about NATCO and how some people are even accusing me of pumping and dumping NATCO. I'm not here to pump and dump. I don't have that kind of influence. Nor do I claim to know any knowledge other than the absolute basics. I'm never here to tell you what to buy. I'm not telling you what to sell. I'm not saying you should target this or target that, like what our talking heads do on the TV or on other channels. I'm purely here trying to share whatever little knowledge I have in wealth creation over a long period of time, and that's about it. That wealth creation can be in many facets. It doesn't have to be related to stock market. It can be in all kinds of forms and shapes, like doing business, finding other means and methods of investing. This is what I'm doing, and I'm trying to share this information with you in an open and honest, unbiased manner as much as I can. Of course, being human, I do have my biases, but I try and keep that out of the video and try to be as even keel as possible. So I wanted to get that caveat out of the way. What I wanted to talk about is a lot of you are panicking, some of you. It is normal. It's happened to me many times, especially during the COVID crash when I saw my portfolio getting hammered. And, I was wondering all kinds of things. Maybe I should have sold. Maybe I should be selling now. Maybe I should take out everything out of the market. God only knows what's going to happen. It took a lot of nerves not to, and said, okay, let's see what happens. It did recover, and we did fantastically well since then. So the question is having the nerves to hold on when you see things move, because that is when you'll be really tested to know if you know what you're doing. It is exactly like being in one side of the crease and you're watching your so-called batsman of the team. You're on the bowler's end and you're watching wickets fall on the other side, and you're standing here in no man's land hoping that someone who comes will be able to tap the ball and you can exchange, and then you can take on the bowlers. It's literally like that when you see what is happening with some of our stocks in the market. Don't panic. The reason why I say don't panic is wickets can keep falling. We're not in a limited over game or with a limited team. We have time on our side. And if you have played yourself in and you believe in yourself, then you should have the confidence you will eventually get to bat again. Be patient, is all I'm saying. Those of you, like I've been warning many times, who have got overzealous and felt like you know what you're doing and you've gone ahead and invested a lot in the market in a very short span of time, would be feeling even more pain than people who have been doing this different coffee range investing, which is what I am trying to do. Because from the beginning of this year till now, we have had 33 days I've been investing. 33 into 2000 is I've invested 66,000 rupees in the market so far, and that is probably down in an average. It's down around 62 to 63,000 rupees. So I've invested around 66,000 rupees, and so called my portfolio, which I've invested so far, is down 3 to 4%, and I'm okay. Even if it's down 5%, 5% of 66 is 3,000 rupees, and if I'm having a loss of 3,000 rupees, I'm still okay. Of course, if you have been unfortunate and put all your eggs in one basket, the pain might be even more exaggerated. I can understand that. But if you have been looking at every day as an opportunity and saying what you felt like doing, and you've been moving around and staying in your list, you should be fine. Some of you may be more, depending on the kind of stocks you picked. Some of you may be less, depending on the stocks you picked. It doesn't mean one is better than the other. These are the ebbs and flows of the market. Maybe next week things can be very different and situation could be worse. I could even be 10% down, just 6,000 rupees. And I'm okay with that too. You should be able to, that is the idea behind Tiffin Coffee range investing. That, I'm okay with it because I'm able to take the punches. As I'm building bricks, some bricks fall off, it's okay. I still continue building. So the reason why I'm saying we should stay in this and not get overzealous and invest gun-ho in the market is, I'll ask Rupesh to share the screens which I'm looking at over here. These are the heat maps, okay? Heat maps are nothing but showing you over a long period of time how stocks have been performing, right? So the first one is a 1 month heat map. That means stock prices over the last month. This is just a Nifty 50, right? All the ones which are green are in profit. All the ones which are red are not in profit, meaning you've lost money on it. And you can see the Nifty over the last 1 month where it is at. More stocks are in the red in the Nifty than in the green. Few, of course, are dark red. That means the losses are huge. I think one or two are in dark green, which means they are still in a very strong position in terms of the upside. Let's go see 6 months. 6 months, you see more red, less green, and the green intensity is not so great, right? Well, the red is looking terrible. Let's switch over to a year. Now it gets interesting. Now you see the green pastures are more and the red pastures are less. And if you go on to looking at 3 years, 3 years ago, if you started investing, you're completely in the green, except for one, which is in red. So this should tell you two things. If you even go back 5 years, because the reason why I'm saying 5 years is someone had commented saying they've been investing in mutual funds over the last 5 years and they're doing great, and people who invested in stocks are suffering. It's not that. If you've been investing in stocks over the last 5 years, you'd also be doing great. Anyone who is doing passive index over the last 5 years should be doing great. It's people who were entered recently, the last 6 months, who must be feeling pain. People who have entered in the last beginning of the year would be feeling pain. Who have felt like they've had FOMO and they've started investing in mutual funds now should be feeling pain. The reason why I'm pulling this up is we are wondering when can we see the so-called the market coming down. I want to show you how much of profit is still there, frothing in the market, even if you look at 3 years and 5 years. And if you look at the US dollar to Indian rupee, the INR, the last 1 year, it's down 5% almost. Last 5 years, it's down 21%. So if you're a foreign investor, institutional investor, you put dollars into the Indian market, right? Even if you're seeing an upside, let's say in some of these stocks over the 5 years, they're up 700%, 200%. If you see the heat map of the 5 years, you have to come down to the last row in the green to see stuff starting to drop below 20%. So if you see, there's still a lot of money which is there in the market and people are sitting on that money. If you even look at the Nifty 500, this is from the NSE website itself, the Nifty 500, which is a broader market, which is not the 50, which is the 500, Nifty 500, even the 5-year return is over, close to total return is 18 and price return is 16, which is great. So let's compare now the Nifty 50 versus the Nifty 500. The Nifty 500 is ticking above the Nifty 50. The broader market, if you see in terms of return over 5 years, it's still at 107% compared to the Nifty 50, which is 89% in comparison. So there's still a lot of, so-called FIs are seeing profit. Yes, the rupee has declined, especially in the last year, it's declined almost 5%. So they are withdrawing, and you're going to see this withdrawal probably picking up steam depending on how the Indian rupee performs. But are they going to exit completely out of thing? There's nothing right now pushing them to do that because there's still a lot of profit left. So they will book their profits and move as they see their returns in the future not being so great. All this dynamics has to play out. Plus, mutual fund investors who have invested in the last year or people who have invested 3 years ago, 5 years ago, seeing their current year returns starting to dwindle and dry up, they may start pulling out. When all this kind of dynamics start playing out and people start getting nervous, you will see withdrawals happening in the market, leading to more pain in the market in terms of price. And that's when we can investigate the idea of looking at more than Tiffin coffee. So please, my main reason for this Sunday video is tomorrow is day 34 and we're going to be investing again in Tiffin coffee ranges. Please, if you see opportunities and if you find yourself getting excited, don't do that. Stay within your budget, like I said 66,000 rupees and being minus 3,000-4,000 rupees, I'm okay with that. If it was, let's say 60 lakhs I've put in the market and I'm down 4-5 lakhs, I would be in a lot of pain, no matter how good I am, right? No matter how great I'm feeling, or no matter even if I have crores of money, I would still be feeling. It's human to feel it. So remember this. So this is the point of Tiffin coffee range. So let's say you've not invested 66 like what I invested. You only have invested like my friend cameraman Arun, who's invested 5,000 rupees, he's down 500 and he's like, why are you bothered? That is the joy of investing in Tiffin coffee range. It helps you keep the confidence going, even when markets get volatile, that you can keep pegging away. And I know in the comments, you're going to find people who have all kinds of theories and, ideas. Let them have, Like I said, we're not here for the masses. We're here for ourselves. We're trying to get through this process of investing and learning and trying to build wealth over a long period of time. And it's going to take that much time. People who know trading, people who know other things are not meant for us. They're not, going to offer this kind of advice or philosophy what we're looking at. Yes, in the short term, things will be volatile. So keep this in mind. People will come. They'll offer all kinds of opinions. And you will have people who will come and say, you're a fool. That's okay. I may be a fool. Some people might think I'm smart. So what? They think I'm smart. It doesn't matter. To you, it should be, I'm investing in what I know and I'm going on the course of action which is right for me. A lot of you have been asking about last year's, recommendations or considerations my brother was talking about. Have some of them turned into, normal needles, as he says. Through this course of this coming week, I'll go through what he did last year and I'll review some of the stocks he has spoken about last year and see if those have come of value today. Because some of you feel that you missed out last year because they became diamond needles and would like to know if they've become regular needles. I'll walk through that and see if any are starting to become available for you this year. Other than that, nothing else. Have a wonderful Sunday. Rest, relax, recuperate, recharge. Next week, we start all over again. Do expect a volatile week as we had this week. Because selling pressure is huge. Like I've been sharing in the Instagram and the WhatsApp group, FI details of this net sale and what the DIs are trying to do. These equations will only help you to give you an idea of where the market is in terms of sentiment. It doesn't tell you on any strategies of investing, right? So don't use those data for anything other than saying, okay, there seems to be this kind of sentiment in the market. So keep that in mind as we get into the week. Have a wonderful day. See you tomorrow with another one. Nothing else more to say. Thank you for watching. Be rich. Bye.